Good evening, guys. Trust everyone is doing well. Hope you guys had a really good weekend. It's Monday and it's 2 minutes until our 7 p.m. start. All right, so I'll just go through the basic housekeeping rules in the hand. Okay. Now, basically, if you have a question, right, the easiest way to get my attention is just by raising your hand. Okay, just by raising your hand. I think there's a button there. Well, I know there's a button there that says raise your hand. Just click on that button, and I'll be able to see it. And I'll unmute your mic. Therefore, you'll be able to speak. Right. So I'll just unmute your mic. Make sure that you have joint audio okay, so you'll be able to speak, or you'll be able to use your phone audio or your laptop audio to connect, and then I'll put you back on mute. Right. Reason being, I don't think I need to explain that over and over again. I think we're going to do that at least 1,000 times this year. But just to go for it 1,001 times for the guys who are new. The reason why we do that is because there's a lot of background noises when guys are in. Right? There's 10, 20, 30 different people logging into one session, and you're bound to get a lot of background noise. So that is why we do that, and it makes it terrible for the guys who weren't there, right? Even for the guys who are live in the session, but the guys who are listening to the recording, it becomes impossible to get anything important from them. So that's why we do it like this. So tonight we're just doing our basic, fundamental, so like breakdown of the markets, right? Bottom down approach. We're looking at the higher time frames, dropping out to lower time frames to sort of map out how our trading should look like for the rest of this week. But as usual, we'll start off with our euro dollar on the daily time frame. And as you can see, this market has been in a very aggressive decline for the past couple of months, right? Since about January 2018, okay, the market has been moving below this 200 moving average, right? So it has been on a bit of a decline. There were levels that we anticipated would be broken, and a lot of them were broken, right? And we did see a rejection at 10900. Okay, it did seem quite far-fetched when we were looking at 110 as a target, right? Quite a few months ago, probably during the beginning of the year. But as you can see, that we actually reached that before the market turned back up. So I am still bearish on the euro dollar long term, and we are looking for mainly short opportunities. However, obviously, if you are looking for buying, it's going to be more of a short term position that can hold for probably 2 or 3 days at most. Okay. Now, you'll see 110, 11100 rather on the upside, and 110. And if you break down, we drop rather to our 4-hour time frame, you can see that there was a nice rejection sweep from one of the previous week's lows. The market just popped up just about that 200 moving average. Okay, so now immediately we can see the previous week's high, right? That high from the previous week. That looks like a really solid level. But we'd like to see some action coming in, right? Right now we do see a bit of an aggressive move to the upside, but I mean, for me, nothing really stands out and says take the position, right? Aside from the swing low below 110, right, which is also a previous week's low, right, probably beginning of November. That's just about it. Okay, there's nothing else to sort of like latch on to this position. So, if you guys remember, we had a bias that was looking at a rejection. Right? The market did reject it. We're expecting the market to push back up to that at least at 111. So we'll wait for that. If that does develop, right, we're certainly looking at some short opportunities. And I'd like to see somewhat of a added confirmation there, right? Bounce off the 200 moving average. Okay, on the daily it seems quite a distance away, but if we do get a bounce off, let's say the 200 or the 800 moving average on the lower time frames, I'm certainly interested in one of those markets. Okay. All right. Now, Next, we're looking at that Euro JPY, right? The Euro yen. The USD yen has been stuck in somewhat of a sideways consolidation. As you can see, that Euro yen has also sort of like ranged sideways for majority of the previous month. Okay, so this is November. Okay, the market opened here, boom, and closed somewhere. So that's a very big movement, right? Or pip change rather. Now, on the long term, okay, I have been bearish on it. If you're looking at the daily, even on the weekly, I have been bearish. I was expecting a push to the lower levels, probably a tag around 15, 12, 7, right, as the first rejection area, but as you can see, the market pulled back aggressively just before it reached that zone. Probably some money trapped down there, right? Now, the trade smash, we'll certainly be looking at how the market behaves around this 121 even level. Okay? If we do get a rejection, right, a confirmed rejection around that area, with the market pushing back down again, then I'm certainly looking for short opportunities. But at the moment, I mean, really nothing solid that we can also latch onto this one. Okay? The level has been tested, but you see, right, we did get, I can't quite remember which week we actually got the trade on the short side, and it did pay out. But as you can see, it didn't quite reach the last level that we actually looked at. Okay? I think the last target was somewhere around 118. Okay? I think 1800 or 1750. Not quite certain, can't quite remember, but we did reach take profit 1 and take profit 2. That's just about it. So also nothing enticing for me there. Okay? So I'll probably be staying out of that one. If I do see a push to the upside, certainly this 200 moving average coming in towards the price action, probably a break above it and then return around there as well. Okay. Below that 200 moving average, candle closes below the 200 moving average, certainly worth taking a look at. But aside from that, I mean, I don't see anything interesting there. Okay, now GBP USD, from that pull back from this low, okay, this higher time frame support level, okay, which was boom tested, right? Market probably reached around 1980 or 1968 rather. Okay, yeah, so 1965. The market extended this 2016 low, so this is the low of 2016, and just pulled back aggressively. Since then, I mean, nothing much has happened. Okay, since then, if we look at what the market has been doing, it has been just ranging sideways, right? Sideways consolidation. Therefore, there's not quite a lot we can do in terms of long-term position trading, right? Even swing trading will be very difficult in this type of scenario because you can see the range is about 200 pips, and in a sideways consolidation, we know that the safest way to trade is to trade the actual range itself. So the market gets to these upper highs, right? When the market gets to these upper highs, you're looking for a short, right? When the market gets to these lower levels around 2,800, then you're looking for a buy, right? So that is the only difficult situation that you might have or experience with the GBP USD. As I said, there was a lot of Brexit uncertainty, which I do believe was one of the reasons for this 800 pip rally, which probably transpired within about 7 or 8 days, which this is the daily time frame. And since then, the market has just been sideways. So I'm not interested in trading markets like this. I'm looking for something that will be trading. So let's wait and see what the market does at 130 and what the market does below 12800. Okay, so the market breaks below that, we'd be much more confident in taking the short on the downside, right? The market breaks above these highs, 130 even, then we'll be looking at opportunities to buy probably to these swing highs, so that's about a 300 pip range that we're looking at there. Good. Now let us take a look at the GBP CAD, so the pound moving. Followed a similar structure with the market coming close to the 2016 low as with the GBP USD. But as you can see that the market was probably short about 120, 125 pips in order to reach that particular level. Okay, let me just start off with the USD CAD. Let me just start off with the USD CAD before we do this. I think it's going to make much more sense if we just do it that way. Okay. All right. Now, as you can see that the GBP, rather the USD CAD has been on an uptrend, okay, very aggressive uptrend for a very long period of time, and I think about 2016, that's when we saw a bit of a drop. Now, what you can see here, what this does look like, it looks like somewhat of a downtrend, but if you do look at this very clearly, you can see that the market is still within this low of the range and that high of the range, right? The range was extended to this one, right? But just this for the example to make things easier. We have this low and that high. So in essence, the market is ranging, right? You can see it's still within the range of the year. Okay, so that is the high of the year, and that is the low of the year. So the market is still within that particular range. Right. So if then we're looking at that scenario on the GBP USD with the sideways consolidation, okay, although it's hasn't been that long, and on the USD CAD also, we're looking at some sideways consolidation. So we're not expecting an aggressively trending market when it comes to the GBP CAD. Okay. So if the markets remain the way that they are for the next couple of weeks, which I'm assuming we might get, then we might not see a lot of movement on the GBP CAD. Right now, the only sort of setup that has developed was this swing, this previous week's high swing, and the market broke just above it. Getting close to there, let's just zoom in. Right, there's that swing high, the market broke above it, aggressively so, came back to retest. All right, now you can see, let's see the guys who are in on the move and broke even there, probably got stopped out for 10 pips or 2 pips or 1 pip, depending on where the break even stop is. And the guys who didn't get out, we're probably only up about 34 pips. Okay, and that is about 2 weeks or so. So, I mean, it's very difficult to stay in markets like that. So, if I were to give you a suggestion, which I'm not, probably be looking the way of the more trending markets, right? As opposed to these sideways markets, which aren't going to really give you a lot. Because I mean, to work that hard for about 2 or 3 weeks and only have 32 or 34 pips to show for them, it does seem like you're being underpaid. Yeah, so that's just my view on the USD CAD at the moment. Right? Doesn't mean that I'm going to hold that view forever, but it just means that at the moment that's what I'm seeing on the GBP, on the USD CAD, and potentially on the GBP CAD as well. Now, if we're looking at the USD JPY, I did bracket this area. Can't quite remember when it was. Right? But we were doing a session and we were just looking at an example of how a breakout actually forms. And this previous high area, this 109 even level, has been a really good level for us. Okay, previously, because there's been a lot of action around the area. Now, USD JPY on the weekly, we can see also sort of like contracting, and the moving average is right where the price is. Okay, usually when the moving average is just below the price action, we know that the market is trending upwards, but where the moving average is somewhere in between where the price is, then we probably got a sideways consolidation market. So at the moment, we don't have any clear breakout. Okay. However, if I were to take a bias on this one, certainly this 109 area where the market just looks like it rejected, probably moved away at 50 pips. That does look like a solid level. Now, I also need a few more things to come together around the area in order for me to say, all right, that looks like a really good trade setup. Okay. One of them has not been validated just as yet, which is at 50 to 62% Fibonacci retracement. And I mean, there hasn't been a real bounce off one of the moving averages. Right? I don't have the 800 on, but if I were to guess, I'd probably think it's somewhere around here. It's probably somewhere around here. Okay, that's just a guess. So we haven't really reached the level that I'd like to see, right? Although it is one of the previous week's highs, but I'd like to see a bit of an extension on the downside in order for me to sort of like be more confident in the setup. Okay. Now, last but certainly not least, the Euro AUD. Now we can see also quite a lot. I can't remember why I changed these colors, but I think it was for last previous week's session. See, the market was coming off lows of 160, boom, extension or extended higher, but with a very aggressive candle one day, which clocked at 175 pips in a single day. Market went into consolidation after that, and you see sort of a pullback into this previous swing high area, which you see 162 even. Okay, market tagged there, pushed above it, and we're expecting somewhat of a breakout on the upside. We didn't quite get it. You see, we had a spike right towards the previous week's high, then the market came back into consolidation again and spiked just towards this previous week's low. So, I mean, my guess is just that the markets are really just winding down towards the end of the year, okay, which is why you see a lot of these markets sort of like going into these consolidation. Right. We probably might not see that much action during the holiday season, simply because of obviously what the technicals are showing us. So that's not 100% guaranteed, but based off what I'm seeing right now at the moment, I mean, there aren't any really setup that you would jump at with some real money, you know. You probably throw in there small lot or something like that, but nothing that you'd throw on the, let's say, throw the kitchen sink at, you know. So, yeah, I mean, we'll still continue with the sessions. Okay. As I said, I am back, right? I was actually in the Eastern Cape. That's something I needed to sort out, and it turns out it is the only section for that Telkom mobile some use I'm from. So I was really struggling there. So in any case, guys, I think for me this is just about it. Right? It's not shaping out to be an exciting week, right? But I do hope that we do get some movement, right? So like close off the year. Like I said, around the middle of December, not the best time to be trading whatsoever. If you are going to be getting any trading opportunities, it's probably going to be some short-term positions, which aren't very reliant on the trend, right? You don't need to worry about the trend all that much when you're looking at these scouting opportunities. Okay, so I mean, guys, if there aren't any questions, right, about any markets or anything that you want us to take a look at, I will be ending off tonight's session here. Right? We'll be going through some intermediate stuff tomorrow around 7 p.m. Yeah. So we're going to be looking at one of my favorite tools that I usually use, and it's going to be very, very, very interesting. Well, to me at least, very, very interesting session. So make sure you make the time to actually attend that one. Okay, guys. So thank you very much. I will have recorded the session. Okay, the guys who couldn't make it, right, I'm sure a lot of guys were surprised that we actually were having a session. So I do apologize for that, but I will upload the video onto YouTube and send through the link on the Telegram channel. And I will be updating the competition details, right? There's a few guys are actually doing really well despite the stagnation of the market. About 2 or 3 guys are actually doing really well. And yeah, I mean, I haven't really figured out when we're going to do that, but we're going to finish up the contest. But I definitely, the minimum is going to be 3 weeks. I mean, 3 months up. Okay. So 3 months, I think, probably around there, we can start to close off. Right? We don't want to do just 1 month because this month is actually really flat. So we just want to give other guys an opportunity to sort of like jump in around January as well as February to sort of like protect. So, if you know other questions, guys, thank you very much for coming through, and I will see you guys tomorrow at 7 p.m. for our session. Cheers.